Good morning and welcome. Patriot News Hour. Joe and Jason on a Friday, wrapping up another crazy week. What a crazy week, crazy year, right? We've got all kinds of political stuff happening. We got wars happening. We got recession talk happening. I mean, Jason, if you really look at it, we got a lot of stuff happening. I mean, right, back to school in full force. The Olympics is getting ready to wrap up. Taylor Swift's got to cancel concerts because terrorists are going to blow it up, right? I mean, oh, my Lord. That would have been something. Could you imagine Taylor Swift getting taken out by ISIS, right? You'd have the wrath of every 12, 13, 14-year-old, all the way probably, you know what, let's face it, all the women in general would probably be, ooh, that could be the end of it. Maybe that's what we should have let happen, right? If they would have taken out Taylor Swift, that could have been the end of ISIS. I mean, right? I mean, all the women in the world and a bunch of the, well, I guess, I don't know, the snowflake guys, right? Get all upset taking out Taylor Swift. Travis Kelce, right? He'd go over there and maybe our problems could be over. I don't know. 800-951-0592. That is our toll-free number, of course. Wealth insurance, as we like to call it, gold and silver is what we do. AllAmericanGold.com is the website. And today, CVS following up with Walgreens saying we're going to close 300 stores between now and the end of the year. Tim Hortons, that's a restaurant chain like in the East. They're saying, hey, we're going to close 40 more locations. And, Jason, it just doesn't end. It seems like every couple of days we get these announcements where, you know, it's not, hey, you know, like JCPenney, hey, we closed 4 stores. Okay, you can live with that, right? 4 stores. But you've got these chains talking about closing hundreds of locations, and it seems like it happens every 2 or 3 days.
Yeah, you know, I think the next couple of weeks there's going to be a lot of things on the calendar that's going to shake the news, so to speak, Joe. So, to tell you the truth, I really didn't know who Taylor Swift was for the longest time. I don't really poke around in the in pop music very much, so I've been so outside of that realm that when everybody in the whole world knows who she is, it took me a couple of years ago I started figuring out that it was actually somebody that was popular because I stay so far outside of that, but I'm wondering if the rest of the world isn't so Taylor Swift crazy as America is. You know,
I think they are. I think they are. I mean, anywhere she goes, you know.
You think the people in Iraq care about Taylor Swift? You think? Well, how about this? How about China?
You know what?
China likes
question.
her. How about China? India? I don't know. Do these countries care about her?
I think they do. You know what? She goes across all lines. Let's face it. I mean. The NFL loves her. I know that she shows up at a football game, and next thing you know, you see more camera shots of Taylor Swift than you do the game.
Well, I guess whatever the money puts in front of your TV screen, so I guess she probably is popular worldwide because you can't escape the money putting her in front of you, right?
Yeah, there you go. Man, hey, yeah, she needs to call us. Taylor, call me up, 800-951-0592. I can help you make sure your wealth can get protected. But it's been one of these weeks where this was supposed to be a quiet week. We didn't get a lot of economic data out. We got Jackson Hole coming up, right? You know, the Fed and all the bankers, right? They go have their big power meeting. This was supposed to be a calm week, and it was anything but. Today, maybe the one day that the Dow doesn't move 500, 600, 700 points. It's early yet, but this may be the only calm day this entire week. As we had fireworks out of Japan, we had fireworks here in the United States, and everybody all of a sudden now talking about recession. What are the odds? It's 25%, 35%, 50%. I'm going to give you the odds. It's 100%. Right? A recession, and a big one, is coming. because, well, that's what we do, right? Boom and bust cycles. And you think about the national debt and how fast this thing is going. It's, $150 billion worth of debt this week, just in 1 week. Just this 1 week alone, and it just doesn't seem to stop. And the fact that we're talking about recession when the government's running deficits well north of $2 trillion. I mean, really, the only question about the debt this year is how high is it going to be? Right? We know it's going to be over $2 trillion. The question is it going to be 2.2, 2.4, 2.6, right? That's the biggest question. And so I guess my worry is, how bad is the deficit going to be when the bust cycle comes? I mean, how bad? Because normally, you know what, back in the normal days, we're running a deficit of $200-300 billion. Oh, recession comes. Hey, I got to, you know what? Let's double it. Let's go to 400, 500, 600, 700 billion. No, right now, what are we going to do? Double it? Let's go to 5 trillion, right? I mean, this is what people don't understand, and I think that the sad part of all of this is it looks like they want World War III to cover it all up, because how can you justify that kind of deficit, Jason, without World War III, right? I mean, that looks like that's going to be their plan. We're back here, Joe and Jason, Patriot Radio News Hour on this Friday. A quick look in at the markets. The Dow's up 50. I mean, that's it, right? I mean, we're so used to it. It's up 500. It's down 500. It's only 50 today. The S&P's up 14. The Nasdaq's up 30. The 10-year note, we had another bad auction yesterday. This time it was the 30-year note. That was 2 in a row. The good news, I guess, is the yield curve almost uninverted yesterday. Today, the 10-year note's down today. So 394. So it lives. The inverted yield curve will make it through another week. But again, the struggles at these auctions are starting to cause concern. And Jamie Dimon, we'll get to that in a minute. Let's just say this. Jamie Dimon and Jason may be reading from the same playbook. Crude oil's higher today. Gold's higher today. Silver's unchanged, 27.50. The currency markets, at least quiet for today. But you need to take action. I know. You're like, but summertime, I just got back from vacation. The kids just went back to school, and it's still, here in the Valley of the Sun, it's still 110 degrees out. I want the Olympic Games. I'm going to watch breakdancing in the Olympics tonight. Actually, I'm probably going to do it. I'm not going to lie. I'm curious. I don't know. I didn't know breakdancing was a sport, but hey, you know what? I'm going to watch it. But you don't have time left. Right? Jason's like, I'm not watching breakdancing. Hey, I'm going to check it out. Why not? But I'm just going to tell you, how much of your wealth are you willing to lose? That's the question. How much of it? How much of your 401k, your IRA, your money market accounts, bank account, how much of your wealth are you willing to risk? Because I'm going to tell you right now, the risk factors are off the chart right now. I mean, Monday, that was just a warning. That was a warning. We're lucky that it was just a warning. Because that means you still have a little bit more time. Get significantly more diversified. And for some of you out there, say, oh, well, I'm diversified enough. I bought some gold. I bought some. No, you're not. You're not. Were you diversified enough during the financial crisis? You weren't. I wasn't. I thought I was. I wasn't. How about the dot-com bubble? Right? Remember that disaster? None of us were diversified back then. Well, I shouldn't say none. Some of you were. Some of you were listening to Eric or my father-in-law, Jim, and got a little bit diversified. This is the wipeout stage. This is where we're at. I wish it was different. Believe me, I wish it was different. But this is where we're at. Check out our friends over at YRefi. Why? Because you get great fixed rates of return, up to 10.25%. Listen, 10% returns on Wall Street, I think we could go a decade without them. The only way we're going to get something better than that, I mean, if the Dow goes down 60% in 1 year and comes back 10% the next, is that great? No. Come on. Up to 10.25% fixed rate of return. Here's the thing. Not correlated to Wall Street. Doesn't care. Guess what? On Monday, YRefi did not care. Jackson Hole, they don't care. Jamie Dimon talks, they don't care. If you've got $50,000 or more, do yourself a favor and at least check it out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or just call them, because they'll explain it to you, the whole thing. You'll be blown away. 888-YREFI-24. Call them up, check it out, and get more diversified. I'm just telling you right now. So yesterday, 2 days ago, we had a horrible 10-year auction. Remember how bad it was? Yesterday, it was the 30-year auction. Another massive tail, over 3 basis points. That's unheard of. Well, it used to be unheard of. That was unheard of until like the last year and a half. Over 3 basis point tail. It was, thankfully, it was only $25 billion. And I say only, like $25 billion is nothing. But that's not huge. $25 billion. The bid to cover, right? We keep talking about it. Just stinks. It's terrible. And, of course, at the end of the day, Jason, these dealers are having to consume 20% of these auctions. And what does that mean? That means these banks, right, they're sitting there saying, hey, we got to buy all of these treasuries. The only good news for the banks is they're really not loaning any money to anybody right now because nobody wants the commercial real estate. No one's buying houses. The auto market stinks. So I guess in one way, at least they're spending their money on these debt auctions. But I just don't know. I mean, at the end of the day, what happens when one of these auctions, these are bad. But what happens when it gets really bad? That's going to be the problem. That's the thing that we worry about. And then Jamie Dimon, I think he sees this. I really do. Because obviously J.P. Morgan, right, they're one of the dealers at the auctions being forced to buy these things. How bad would the tail be without these dealers buying? That's the thing I wonder about. I'm like, if they didn't put bids in eventually to save these things, how bad would it be? But he was out warning again yesterday about this soft landing stuff. And I'm sorry. Why is it that I'm sitting there telling you that's not going to happen? I've been telling you this. Why is it that Jamie Dimon's telling you this? Jason, they've never done it before. It's actually never happened. I mean, if the Fed had pulled this off before, okay, maybe. At least there's a chance. Jason, they've never been able to do it. And now Jamie Dimon's sitting there talking about, hey, guys, I don't think you understand how bad the situation really is. The printing press needs to stop. And he's out now talking, just like you're talking, stagflation. He's saying, listen, the economy's going to go into recession, but prices are going to go out. They're going to go higher.
It's why I'm going to keep talking about World War II. The debt to GDP is the only time it's been where it's at for us in this country was World War II. And World War II is the direct result of a depression. I mean, in a lot of ways, Joe, the way that the news is so controlled after the housing crash, we are in a modern society. When you look at the depression, you see all the breadlines. But we have like 40 million Americans that have EBT cards. Maybe the depression isn't so bad nowadays because you've got modern ways to soften it. But does the last 15 years feel like economic bliss in this country? I don't think it does. Have we been experiencing some sort of a soft depression the last 15 years leading up to our World War II? Which then after World War II, what you have is 30 years plus, close to 40 years of slowly but surely the rates going up. The rates going up, and you have inflation. And then by the 1970s, at the end of that cycle, you had massive inflation, massive rate hikes, and then suddenly you could start taking the rates down. And then you had the 80s and the 90s and the so-called great economy, and then as you had a 30 or 40-year rate cycle going down. It really looks like we're on the uptick. I don't see us going back to zero. Maybe we go down a few points. I don't know what they're going to do. A lot of rich guys want to make one last push right before, higher rates? Like Jamie Dimon said, 8% coming our way maybe in a year or two. And then inflation. Inflation that never ceases, and you have to keep the rates. You don't want out-of-control inflation. You got to keep the rates at a reasonable place, Joe. And we could see in our kids' next generation, they could be dealing with the 1970s inflation that we saw previous generations had to deal with, Joe.
Well, geopolitics, housing. This is Jamie Dimon. Housing, the deficit, the spending, the quantitative tightening and easing, the election. All of these, he says, is cause for concern, and he keeps warning about the persistence of high inflation and talking about he's not sure whether the Federal Reserve can even meet its inflation goal, right? Hey, I don't think they want to, right? They say that they do, but the actualities is it really doesn't matter one way or another. He said that, listen, even mild recession, hard recession, hey, I think we could be okay. What we don't want is this hard landing. But he keeps talking about the fact that, Jason, these guys keep printing money. They keep spending. And Jamie Dimon is very concerned. Obviously what happened on Monday with Japan, but he's talking about the fact that, hey, if the Fed cuts rates, get ready for more inflation. And that's something where we've been saying that for a while. The markets are begging them to cut rates, and Jamie Dimon is saying if they cut rates, get ready, we're going to have more inflation. Look at, what inflation data came out in China today. It was the highest level this year in China. And China's, they're in the middle of a recession. I mean, they still have positive economic growth, but for China, it's pretty much a recession. And Jason, what has China been doing? They've been cutting rates.
Yeah, and that's not going to hold for long. I mean, Japan felt like they had to start raising rates. They know. This rate cycle I talk about, which could take several decades, Every time they lower the rates, there will be risk of higher inflation. Every time. That's what happened after World War II with that debt to GDP being so high. They inflated their way out of World War II. They weren't being responsible, Joe. They weren't, the debt didn't go down. They just kept pushing it up and up and up until by the 1980s we got to that $1 trillion. And then suddenly there was enough room in the rates because the 1970s, early 80s inflation, we had the 17% or whatever Volcker took it up to. Now you had plenty of time, plenty of room to start lowering it. I was looking at the U.S. debt. I mean, what was it, 2 weeks ago, Joe? Maybe less than 2 weeks ago, we got to $35 trillion. It seems like that last $200 billion just seems to take a while. They don't want to hit that next number. And now, boom, we're almost at $35 trillion, $150 billion. I was looking at the numbers on that. That's almost 0.5%. Not quite, but it's almost 0.5% in 2 weeks. If you want to know what 0.5% interest on 2 weeks of $35 trillion is, it's $145 billion. 145, 0.5%, Joe, which doesn't sound like a lot. That was done in 2 weeks. That thing is moving fast.
Right? Multiply that by 26, and you'll get the reason why Jamie Dimon says stagflation is around the corner. Patriot Radio News Hour. We'll be back after the break. Under 9510592, we heard from Burger King yesterday, Tim Hortons, Popeyes, Firehouse Subs, all of them missing earnings expectations. Tim Horton announced they're closing 40 restaurants. Burger King, probably the worst of the group. Them and Firehouse Sub, negative same-store sales. Popeyes barely had sales increase, but yet all of them saying that continued higher prices, consumers are pulling back. Chains are all talking about, let's face it, cutting hours, closing stores. Their CEOs and CFOs talking about the consumer just simply being out of money. And let's face it, these are inexpensive places, right? I'm sure. Why do I have the feeling that the high-end chains are just fine, right? The high-end steakhouses, the seafood places, they're probably packed. But we're really, really seeing it on the lower end. And then questions abound about the Biden administration's numbers. The oil markets are now talking about the Biden administration giving misleading data on how much oil is there really? Are they actually putting oil in the strategic oil reserve? Some of them now questioning, Jason, the Biden administration, and they're not putting a lot in. But now some of them are saying not only are they not putting it in, the little bit they say they're putting in, it looks like they continue to draw this down. It's going to be very interesting when the next hurricane comes. We're going to get one. What's going to happen with these numbers? We look at payroll numbers. Every time they tell us how many jobs are created, a month or two later, it's always less than that. The oil markets, though, a big stake yesterday. It's funny because oil's up about $4 this week. That the Biden administration may be providing misleading numbers. I don't know. You can't prove it, right, one way or the other. But all of these revisions come out, and they're all the same, right? They always get revised worse. And people are now openly starting to question the validity. And Jason, that's another dangerous game. If we can't trust the numbers, how can these people make big, important decisions? And when something breaks in these markets, if these numbers are being hyperinflated, when something breaks, it's going to be that much worse, right? All of a sudden, instead of a $3, $4, $5 move, we get $10, $20, $30 moves, and it looks like these numbers are wrong across the board.
And it seems like one of the only things that's more manipulated than gold and silver is the oil markets. It's the way that they jerk us around. Most people in this country think that, well, we have Biden here, so it's bad for oil. The oil companies are 3x to 5x more profitable than the Trump years. And here's the thing: you just squeeze the supply, then the price goes up, and you make money that way. The fact that America started buying oil from Venezuela over the last few years, the oil markets are very interesting, Joe, because I think it's very complicated what's happening there. These reserves you're saying that are very low. It's very interesting. The oil companies love Joe Biden. No matter what anyone says, he's been helping them out big time. When Trump comes in, is he going to fill it up? Is he going to pump like they keep talking about it at the rallies? Is he going to bring the oil prices down for a while? Or do we need Trump there because he's going to pump a whole lot because maybe the inflation, like Jamie Dimon says, is going to come back, and this is one way to try to ease the pain that's coming, Joe. You see, you squeeze the supply and you give the oil companies these huge profits in the Biden years. Trump comes in and he's going to ease whatever catastrophe is ready to hit us by putting out a huge supply to try to keep the inflation down. That's kind of what it seems like might be happening, Joe.
It's going to be interesting. We're pumping more oil than we ever have.
Yep.
Matter of fact, I think I'm right. I think we pump more oil than anybody. Even Saudi Arabia, even Russia, we pump more oil than anybody. And yet, we've got the least amount of supply. I mean, really going back since we started the strategic oil reserve, right? When we started filling this thing up, that's it really defies logic. And when we're talking about oil at $76, $77, I mean, when I first started here, we were talking about the oil price band of it was $18 to $28, right? When oil got to $18, Saudi Arabia would cut production. When it got to $28, they would increase it. And it just, that's all it did. Now we're talking about oil at 77 and thinking that it's inexpensive right now. And the guys that trade the oil markets are saying, hey, guys, listen, the math doesn't work here. There's a lot less oil than people think. I don't know. What do you believe? I don't know.
Well, it's interesting how a lot of attention is being paid back to Venezuela again. And per country, if you look at just countries, I don't know how America ranks, but if you look at Saudi Arabia's oil supply versus Venezuela, Venezuela has more. And Trump is anxious to take it, right? He's had public comments about, we were ready to take it. And then Biden comes in, and now we're buying it from them. Well, that doesn't hold too well, right, for the world system to be buying it from a so-called enemy of your system. So, Joe, this could be one of the things that sets off the so-called World War III or whatever's going to happen. Venezuela can't be sitting on that and enriching themselves only. They have to be taxed, so to speak, don't they? So that supply, because you're saying we're using more and more, and we have nothing in the backup supply. Well, you got to get it from somewhere, right, Joe? Got to get it from somewhere. And the Middle East, I don't know how. Here's another thing: where tensions flaring there. Well, it's all oil. It looks like, isn't it?
Boy, it really is. And again, oil so important. It is, when we talk about commodities, it's the biggest of the big. There's nothing bigger than oil, and it's not even close, right? Gold's a pretty deep market. Silver, a little less, right? Soybeans, wheat, sugar, you name it, all the grains, all pales in comparison to the size of the crude oil markets. And I find it very disturbing when we talk about BRICS, Saudi Arabia now switching to the Bank of International Settlements so they can take anything they want, any currency for oil. And now all of a sudden people are starting to squawk about oil inventories and numbers being, fabricated. Yeah, World War III, probably. 800-951-0592. Patriot Radio News Hour. Joe and Jason wrapping up the week here. Gold continuing to flirt with all-time record highs now. Squarely back above that $2,400. Right now, $24.31 on gold today. Silver, $27.41. The Dow has gone negative now. The S&P, the NASDAQ following suit. We'll see how the day wraps up. Today's special, and I'm just going to tell you this. Business has picked up significantly this week. We've been really in a really good sweet spot this summer with the low premiums. We didn't get the price drop that we normally get in the summer months. You know, when you think about gold, gold always is strong at the beginning of the year. Then it kind of drops off May, June, July, August. The price usually falls, and then it rallies. And then when we get into Thanksgiving, Christmas, right, it usually falls. Right, then the start of the year, it rallies. That's the normal pattern of gold. When you look at gold the last 20 years, it's not perfect. Doesn't happen that way every year, but the vast majority of the time, that's what happens. If you said, Joe, when's the best time to buy gold? I'll always tell you, when you're ready to buy it. When you have the money, it's always a good time. But if you said, okay, when factoring everything in, I would usually probably tell you July and December. Why? Because usually, let's face it, the people that got a lot of money, they're on vacation in July, they're on holiday mode in December, and the premiums become the best. And what does that mean? You can buy it closer to spot than you can, say, in January or February or March, right? And we've seen it. Listen, we've seen gold $300, $400, $500 over the spot price. When talking about buying private gold, it can get pricey. And when business picks up, guess what? The premiums go with it. Gold's up like $3 today. $20 gold pieces today are up $55. That's the kind of thing that we're talking about. But it's still, listen, we're fortunate. We didn't get the price drop, but we did get the premiums to come in. But they're getting ready to go the other way again. And unfortunately, I think we're going to get both here. I think we're going to get a run, another gold run here because the rate cuts. They need the rate cuts. And I think we're going to see the premiums pick up as well. So take advantage because this dead period is coming to an end here. $10 liberties today. 1 through 19, $13.35. If you buy 20 or more, $13.25. So $10 liberties, 1 through 19, $13.35. 20 or more, $13.25 at 800-951-0592. And I'll just say this. I'll be very surprised if $10 liberties are less than $1,500 before the end of the year. That's what I'm just saying it flat out here. I think we're going to see $10 liberties, Jason, be $1,500 a shot between now and the end of the year. So $13.35, 20 or more, $13.25. That's really a good place to come into the market right now.
Yeah, these things will get more and more expensive, and every year they sure do, Joe. And then sometimes they go sideways. Something, and I know it was overbought in 2011, and a lot of people are afraid of gold because of 2011. But we don't have another 2011 in front of us. We'll let you know if another 2011 is developing. We're far away from that. But there is a thing that a lot of rich guys say, Joe. Because I'm not talking about the wealthiest in the world. I'm just talking average rich guys. They have a saying. They say, "Sell in May, walk away." I don't know if you've heard that, Joe. Sell in May, walk away. What it is you go through your school years and your college years, and what do? About late in May, you get off from school, and you have 3 or 4 months off for the summer. You get to enjoy, and then you get back in August, and you're back into the grind, right? With some of these guys, they take 3 or 4 months off every year. The summer, sell in May. And then they have a big pot of cash they can use to do whatever they want for their fun and whatever. And then when it gets to be about this time of year, they find out whatever assets are cheap. There's always some assets that are still cheap throughout the summer. Gold, as Joe is saying, he's watched this for years. A lot of these rich guys don't care to hold on to gold as much as we would tell you to hold on to it. But if it's still cheap in August, Joe, they just load it back up and go back to work and with all their companies and all their assets and the kids are in school. They're working. You're right. So and there's that saying. And if you look at the stuff, the prices of things in May, if you sold a bunch of stuff in May, here you are in August. If you're wanting to buy it back, a lot of these things didn't not too bad of a time to buy back in, Joe. So August is good. September, I don't know if you want to wait till September, Joe. This. We still might be at this price point, but I've seen some of the premiums on silver going up across the country.
Yeah.
There's some silver going up, so you better watch it closely if you're trying to pinpoint it. This might be your time, Joe.
Well, I'm going to say this: got Jackson Hole at the end of this month. September, everyone's expecting rate cuts. That just points to higher gold and silver prices. Take advantage before it happens. 800-951-0592. Patriot Radio News Hour. Joe and Jason wrapping up the week when we get back. Eight 800-951-0592. We're probably going to see record high gold prices as we come into the end of this year. Rate cuts, not only are they on the table, it's almost at this point that it's like they have to. $10 liberties, 1 through 19, $13.35. 20 or more, $13.25 at 800-951-0592. And Eviction just came out here in Maricopa County. Holy cow. Almost an all-time record high. Last month, landlords, get this is just Maricopa County. 7,903 eviction notices. That's up 9% in a month. So from June to July. Remember we said something kind of broke at the end of June into July, and this really highlights it. Almost a 10% increase in eviction notices in a single month. By the way, eviction notices are up 30% from July of 2019. So before we ever even heard the word COVID, evictions are up 30%. And here's the thing, Jason, all these cities and all these states, they're out of money because the rental assistance money is all gone. And they're saying that Metro Phoenix is going to shatter the record for evictions in a single year. By the way, last year was the second highest ever at 83,000. And it looks like we're going to break that number. And I think this is really something we're going to see all over the country as people ran out of money, right? When the money's out, the credit cards are out. This is what happens. And it's funny that Jamie Dimon mentioned housing in his little tirade the other day. Going to be very interesting how this plays out because I've been seeing a lot of these apartment complex notes are going belly up now. And you know what? They may have people in them, but if they don't pay the rent, it's not going to end well.
Yeah, what happens when the guy that owns the 24-plex with tenants in there goes belly up? What happens in that situation, Joe? I mean, they can't kick everyone out. What happens there?
Yeah, I don't know. That's a great question. I mean, I'm sure BlackRock or Blackstone or Vanguard, somebody will buy. Yeah, right?
Well, there you go. There, you build it, and they will buy it off you. There you go. Because there's a lot of those popping up all over Colorado, man. The 24-plex apartment building is just crazy out of control right now.
Yeah, quick look in here now. The Dow's down 50, but it's only 50, right? It's a pretty quiet day. The S&P is flat. The Nasdaq's down 23. Gold's having a good day. And really a pretty good week here, recovering very nicely. 24.31 right now. And again, silver just hanging out here at $27.40. And you know what? I love silver at $27. It really is. It's outrageously inexpensive here. Silver Eagle $6.85. You know what? Hey, how about a roll of dimes at $110? I mean, that's. At one point, I think we were close to like $130 a roll on a roll of dimes. Take advantage of the. You know what? I'll say this. Maybe the prices aren't down, but take advantage of the lower premiums. How's that? Because they're coming to an end here. 800-951-0592. Jason and I, we're going to come right back, wrap up the week with the half-empty cup. We'll see you all later. Take care. We'll be back on Monday with what's going to happen this week.